Aloha, folks. It is Jason C. Scott. It's Thursday, December 19th, 2024. And, well, this is your mortgage rate update in December. Folks, first off, I have to explain that we've gone through this now 3 times this year. September, October, November-ish, and now December, right? Every time that there's an announcement that the Fed is going to cut rates, everybody reaches out to me like, Jay, where do you think rates are going to go? And every time I have to go and explain this over and over again. So I'm going to do it on video. And so hopefully you'll see this. And I don't mind doing these updates because a lot of times I'll get new people that will ask it. But it's when the same people ask the same thing over and over, I'm kind of like, guys, do you not remember our last conversation? So remember, when the Fed cuts rates, that is not a direct correlation to mortgage rates, right? That is for your short-term interest rates, credit cards, installment loans, auto loans, money market accounts, right? And that's the other side of the house. That's where people invest, okay? It does not affect directly to 30-year mortgage rates. So just like true to course, the Fed completed their 2-day meeting, came back with their notes. Originally they were thinking about cutting anywhere from 100 to 125 basis points over the next year. They're looking to pull that back a little bit, mainly because, one, we're starting to see inflation creep up again, which, if you guys remember, I've said this many times, inflation is the antithesis of mortgage rates. Mortgage-backed securities doesn't like, inflation. So when you have a Fed cut, that's great for your credit cards, installment loans, auto loans, and stuff like that. But think about it from a money market account side, right? If you guys remember, all the way back in September, leading up to September, we had about 7 to 10 days of glorious interest rates. Rates had dropped a ton, right? And then they were saying, hey, the Fed rate cut is coming. It's coming. Kind of like the British are coming, right? And as soon as it happened, boom, what happened? Mortgage rates went up. The market digested it. They didn't like it, and boom. So when people are losing money on their when they're basically they're losing money on their money market account. That's a short-term investment. They look or seek elsewhere for long-term, and long-term is the 10-year U.S. Treasury yields, right? So as more people invest into 10-year U.S. Treasury yields, what do you think it does? It increases the price to buy those yields. And as it increases the price, that also makes the rates climb up, right? So they're like, Jay, well, what do we do? Well, here's what you do. You get pre-approved. I know when people work with me, I give them what the highest rate is for that day. Say, okay, rates climb and you're at this point, you can still afford it within your budget. You get an accepted offer, it's been a roller coaster, like ridiculous. It's kind of like it's kind of like riding the roller coaster at Magic Mountain called Colossus. It's got these crazy up and down camelbacks is what we would call them. That's what the mortgage rate, MBS mortgage-backed securities line looks like this year. It's nuts. So when I look at this, and I'm looking at it right now, that's why I'm not looking down or looking at the camera to you. I looked over the last year, and today, 10-year U.S. Treasury yields have eclipsed their highest point that they've been for the last last 12 months. This is the highest that they've been. So what does that mean? They're going to go up again. Inversely, when I look at mortgage-backed securities, we're almost to the lowest of where we've been all year. We don't have much farther to go, and it looks like we've already broke a couple Fibonacci lines and some days of support or moving day average support lines. So it's got a lot of ways to drop, which means rates can continue to climb. So what does this mean for you? You're pre-approved and you're out shopping for a home and it's within your budget. You need to buy now. Because here's the other thing. You have 1.2 million homes in inventory, period, across the United States, right? You have over 1.9 million in demand. So supply and demand are wonky. You're not going to see prices of homes come down. They're going to keep going up. They keep going up and rates keep going up. Eventually, you're not going to be able to afford shit or shinola, right? So if you can afford to buy a home now, because most people are saying, oh, I'm just going to wait till the rates come back down. You might as well be waiting for the second coming. Jesus is coming. We just don't know when, right? So same thing with the rates. We have no idea when they're coming down either. So if you can afford to buy a home, buy it now. You will reap the windfall later. Because remember, we always say buying real estate, it's like a marathon. It's not a sprint, right? You got to ride the waves. If I don't hear from you all again before Christmas, please have a Merry Christmas and a Happy New Year. Be safe. A lot of crazy shit going on out there. In the Army, we used to always say, stay alert, stay alive. Future looks bright, but be paranoid. I firmly believe that. Stay alert, stay alive, stay safe, and we'll talk again soon. Aloha.